Good morning, friends. Today it's 13th of December 2024, and the technical outlook for Nifty and Bank Nifty futures for intraday and short-term time frame is as follows. Nifty 50 is on verge of giving a negative weekly closing post last 3 weeks of sharp up move. Since last few trading sessions, we have been saying that indices are in time and price consolidation mode within a broad range with immediate support for Nifty 50 at around 24,400 and 24,000 levels, above which the bias remains buy on dip. While it was also mentioned that most of the indices are at around mid-term hurdle and thus leverage position should be reduced. Especially it was mentioned that Nifty mid-cap and Nifty small-cap indices are trading at around its crucial mid-term resistances, and one need to be very selective and fresh buying should only be looked on dips towards support levels. Yesterday, Nifty 50 and Nifty mid-cap index ended in red, down almost 0.5%, while Nifty small cap index was down almost 1%, and it has formed a bearish engulfing candle on daily charts. Yesterday negative closing is first dent to short-term bulls, as quite number of counters have given an indication of possible lower lows in days to come. Thus, technically we continue to hold our outlook that be very selective in small and mid cap space as of now. We can see lower support levels to be tested in days to come. Technically, Nifty 50 index remains under pressure sub 24,800 levels with crucial support at around 24,400 and 24,000 mark, which can attract fresh buying interest in days to come. These are crucial levels for short-term bulls. In intraday today, 24,700 for Nifty futures can be looked as silver line, trading below which the bias will remain pressure with support at around 24,500 followed by 24,400. While in case of Bank Nifty futures, which ended last session at 53,429, intraday bias will remain range to down below 53,600 levels with a support at around 53,000 levels initially, which can be looked as a first intraday support. Overall, both indices are expected to close the week in red. Yesterday, Dow Jones has also closed below 44,000 mark. Since last few trading sessions, we have been saying that 45,000 is very important resistance level for Dow Jones on a mid-term time frame, and it can witness a pause and consolidation from those levels. And in line with expectations, Dow Jones has corrected almost 1,000 points. But yesterday, closing below 44,000 level, along with treasury yields climbing back on hotter than expected inflation report, has dented the short-term bulls. Trading below 44,000 mark for Dow Jones is not a good sign for short-term bulls, as people are expecting that PPI data, which has shot up to 3% after increasing in October to 2.6%, can derail Federal Bank rate cut expectations next week. So technically, Dow Jones below 44,000 mark is the first dent to short-term bulls sentiments and intensify pressure on pullback attempts. Overall, at domestic level, be light with leverages and look for lower support levels to be tested, where once the indices give indication for pullback, we will look for fresh buying interest. Thank you.